So yeah, Adrian, I have gone through some of your videos, which you were talking about the stock trading and the tips that helps people to make a lot of profit in the stock trading. So why are you doing stock trading?
Why?
Yeah.
Well, for a couple of reasons. Good, interesting question, actually. Um, I, I think the biggest reason, I mean, the obvious one is to make money, right? To build wealth.
Mhm,
But beyond that, the biggest reason is that I find it a fascinating challenge. You
mhm,
know, it appears easy, but it's not. It's difficult to make money, difficult to be consistent and make money long term. There's
mhm,
a lot of competition in the markets. The market is always changing a little bit, but it always has some common behavior as well. And so it's a really interesting puzzle.
mhm,
And
mhm,
I really enjoy the process of building strategies and testing them to make sure that they work, and then deploying them with real money.
mhm,
I also enjoy the psychological aspect of it because if anyone has traded for a little while, you know when something goes in your favor, you feel good. When it goes against you, you feel bad. The emotional
mhm,
swings are very constant, and getting control of that and rising above the emotion and observing the emotion rather than acting on the emotion is a
mhm,
really fascinating study in human psychology. And so
mhm,
I quite
mhm,
enjoy learning about myself and about other people in that way as well.
mhm, mhm. So that is the reason. I mean, you in a way like the ups and downs of your mind, which is, I mean, you are a kind of watching the ups and downs which is happening in your mind respective to the stock trading which you are doing. So you are a kind of enjoying that. This is the reason you are actually doing the.
Well, enjoying is it's
I
probably
mean, you are
exaggerated.
obviously getting ecstasy. There are different things people are getting
Right. It's
ecstasy from.
yeah, it's fascinating to observe the emotional reactions. It's like
Mm-hmm.
something happens in the market and there's an instinctive emotional reaction to either run away, hide, you know, go more in, quit,
Mm-hmm.
leave. All of the fear and greed based reactions. They're instinctive and they happen very, very quickly.
Mm-hmm. Mm-hmm.
And I really what I enjoy is not the emotional reaction, but the
Mm-hmm.
observation of the emotional reaction
Mm-hmm.
and the uh, the systematic way of addressing
Mm-hmm.
that observation. Because
Mm-hmm.
I
Mm-hmm.
trade systematically with rules. The rules tell me when to buy and when to sell. The
Mm-hmm.
decisions aren't based on emotion, but the emotion
Mm-hmm.
is still there. So
Mm-hmm.
it's very
Mm-hmm.
interesting
Mm-hmm.
to watch the emotion when I'm trading and then use that emotion as a trigger or as a stimulus to come up with new
Mm-hmm.
ideas to test, and new strategies to create. So
Mm-hmm.
all
Mm-hmm.
of that is a very interesting challenge in the markets.
So when we are talking about the stock trading per se, there is two different emotions happens in two different point. One is you invested something in some kind of stock and it's went up. So this time you feel emotions pretty good, and the stock has came down. So this time you feel a different sort of emotion. So which emotion you like most?
Well, the most enjoyable one is
Mhm.
obviously when it's moving in your favor and you get, oh, I'm good. I made the right decision. I feel happy about this. I'm getting more wealthy. I'm making money. That's actually not the most helpful emotion, though.
Mhm,
The negative side, which is when it starts moving against you, you start
mhm,
losing money. That's where you can learn a lot more about yourself, I think.
mhm, mhm,
So from a personal development perspective, I think observing the fear, the loss, the lack, um, the concern, maybe I'm not good enough, observing all of that and then letting it go and releasing it is so that you can keep following your rules. I think you can learn more from a personal development perspective from
Mm-hmm.
that side of it. But it's not fun. You know, that bit is
Mm-hmm.
not fun. There's a lot of
Mm-hmm.
negative feedback that we get as traders.
Mm-hmm.
And, you know, the markets will, even if the market is moving up, right, and we're
Mm-hmm.
making money, it doesn't just go straight up. It's up and down, up and down, up and down, up and down,
There
down,
are
down.
some sort of patterns, like something will go up and suddenly it can go up, and there is some other sort of. I mean, I have learned something from the books. There are some patterns which people are trying to identify the movements of the stocks which is in the market and stuffs like that. So yeah, continue.
Yeah, I think, you know, what I was going to say was that because nothing moves directly up, always
Yes.
up in your favor, there's ups and downs. It doesn't matter how much money you're making, there's always some negative feedback because you make
Mm-hmm.
money and then it's down. It's like, oh, you make money,
Mm-hmm.
oh, make money, oh. So
Mm-hmm.
there's a lot of negative feedback coming when you're trading in the market.
Mm-hmm.
And that is why it's so difficult for most people to trade well and to make money, because the negative feedback is very hard to deal with.
Mm-hmm.
So the way I deal with that, the way we deal with that at Enlightened Stock Trading, is to put rules in place, systems that tell you when to buy and when to sell.
Mm-hmm.
Because if we leave it to the emotions, there's so much negative feedback and so many emotional swings, it's
Mm-hmm.
almost impossible to make consistent decisions. So instead, we
Mm-hmm.
have rules that tell us exactly when to buy, exactly when to sell, and then we have to
Mhm,
just observe our emotions, but let the rules run, and just follow the rules. So
mhm, mhm,
that's the magic. That's how we can survive and profit in the markets despite all of the emotional swings. It's by separating ourselves and using rules that we've tested and built confidence in to make money.
mhm. So basically, you could have identified the patterns, and you might have developed some tools and systems and things like that that could actually help you to trade much better. So what are the things you have developed, and also do you offer this to people, if they want to trade or something that sort? How does it work?
Yeah, so I mean, yes, I have. I mean, I call them trading systems, right? Or some people might say
Mhm,
trading strategy or trading algo. It's all the same sort of thing. They're rules that tell you when to buy, when to sell, how much to buy, how much to sell.
mhm,
There's different types of rules. There's trend following rules where you buy something that's going up and you hold it until it's no longer going up and it starts trending down.
mhm,
And you get out. Mean reversion rules where you buy something that has a sudden dip from fear or panic, and then you get out when there's a little bounce.
mhm,
Um, there's seasonality rules that buy at certain times of the week or the month or the year. So there's different types of rules, and I have trading strategies or trading systems for each of those. Um, when I'm teaching another trader, I
mhm,
provide the rules, which is part of the magic. Yeah, you need
mhm,
rules that are profitable. You need systems that are profitable, but it's not the whole story, because I could give you some rules and you could follow them, and
mhm,
if you made money every day, you'd think they were good rules. But there's going to be days where you don't make money. There might be weeks or months where you don't make money because the market
mhm,
gives you profit like this. It's not always
mhm,
up, 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 up. And as soon as the rules I give you start losing money, what happens to your confidence?
mhm, mhm.
You start losing confidence. And
Exactly.
if you lose enough, then you lose complete confidence and you quit. Those
Mhm,
rules
mhm,
might be very good rules. They might be the best rules in the world, but if you lose confidence in them, you won't follow them. So when
mhm,
I'm
mhm,
teaching, I teach the rules, but I also teach how to test and evaluate the rules so that you build
mhm,
confidence in them, so that you know
mhm,
exactly what to expect with those rules. How many wins in a
mhm,
row? How many losses in a row? What percentage of wins and losses? How big are the wins? How big are the losses? How long
mhm,
do the trades take? What does the
mhm,
profile of the equity curve of your system look like? So when
mhm,
you know
mhm,
what to expect and you've tested it, then you can be confident. So
mhm,
it's partly about me providing the rules, and it's partly about me showing, teaching how to test and evaluate the rules so you can build the confidence for yourself rather
Mhm.
than just trusting me.
Mhm. 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 Mhm.
Because your confidence is much more important. You need to
Mhm.
have that absolute confidence rather than just blind faith that the rules that someone gives you work.
Mhm. Mhm. If we observe the world, it always has a mathematical patterns. I'm a software developer. I understand the patterns and the problems which everyday peoples are facing, because if we look into the world in the way a technology person who is understand, like it's a lot of problems. I mean, I mean, when we look into the softwares, what we do is like try to fix the problems.
Hmm.
So, if the problems are fixable, what does it mean? It means that it is a mathematical repetitions of the uncertainty, which is actually happening. So, when we understand this particular pattern, because the when somebody is buying the stock and somebody is selling the stock, is also human beings, they have a general behavioral pattern. They are actually trading the thing, so there will be, obviously there will be a systematical mathematics formula can be observable. So if some rules is been made out of these mathematical formulas, is there a percentage that can go wrong, and why it can happen in that way?
Yeah, absolutely. I mean, first of all, you're exactly right. There are
Mm-hmm.
people in the markets, and the people behave a certain way. They have certain emotions, certain things happen, and so there are repeatable patterns.
Mm-hmm.
The challenge is those patterns don't work 100% of the time.
Mm-hmm.
In fact, the markets are very random, very chaotic. So there might be a pattern there, but sometimes it works, sometimes it doesn't work. You just need a pattern that works enough so that on average you can make money.
Mm-hmm.
And also when you buy and it's a bad trade and you lose money, you've got to make sure that you don't lose too much. So in order
Mm-hmm.
to succeed as a trader, the first thing we have to accept is that there's a lot of uncertainty.
Mm-hmm. Mm-hmm.
Yeah. We might have a pattern that we've developed a system around, and that system might be profitable in the long run,
Mm-hmm.
but each individual trade has a high degree of uncertainty. It could be a big winner, could be a big loser, could be break even, could be a little bit, little win, little loss. We won't
Mm-hmm.
know in advance what type of trade that is. So in order to achieve the profitability of the system or the pattern in the long run, we
Mm-hmm.
need to put a little bit of risk on each trade. So if we're wrong, we don't lose very much. If we're right,
Mm-hmm.
we don't make very much. But
Mm-hmm.
the key is when we're wrong, we can't lose a lot of money. We don't want to lose a lot of money because if
Mm-hmm.
we put too much um, risk on one trade and it turns out to be a bad trade, because there's always bad trades, our account
Mm-hmm.
drops so much and it's hard
Mm-hmm.
to recover. If we
Mm-hmm.
have $100 in our account and we
Mm-hmm.
lose $10, so now it's
Mm-hmm.
90, we need
Mm-hmm.
to make, so we've lost 10%, right? But we need to
Mm-hmm.
make 11% to get back to 100. So it's a
Mm-hmm.
little more we've got to make up. But if we lose 50% of our account from 100 down to
Mm-hmm.
50, we
Mm-hmm.
have to now make 100% on the 50 to get back to 100.
Mm-hmm.
So
Mm-hmm.
the more we lose, the harder it is to recover and the
Mm-hmm.
less chance we've got of succeeding long term. So
Mm-hmm.
to make a pattern work, we accept that
Mm-hmm.
there's uncertainty. We put a
Mm-hmm.
small amount of risk on each trade. So if we're wrong, we don't lose too much so that we've got a chance to recover and go on to make more profits in the long term.
Mm-hmm. 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 So this is something about the daily trades which is happening. If we talk about the future options, so like this stock can be go a little bit higher in x and y z date, and we can make an option to buy that stock in that particular day which is not yet been occurred, and we can sell the stock in that particular day which not yet been happened. So in that case, the probability of losing and the probability of winning is a little bit more, and little bit. I mean, it's maximum risk. That's what I feel. How do you see about this? Like, future options. Does this rules will work for that as well?
Yeah. So are you talking about mostly how the future is unknown, right? So,
Mm-hmm.
we don't know whether it's going to, the market is going to go in our favor or go against us or just go sideways. It's
Mm-hmm.
unpredictable.
Mm-hmm.
We need to accept that we can't predict the future. We can't
Mm-hmm.
say with certainty it's going up tomorrow, it's going up over the next
No,
week. It's
you
going,
cannot say to somebody like me that we cannot predict future. I'm an astrologer as well. Like, I have even predicted the Trump will become the president. You can see in my videos, and and even the about the COVID stuff. I have predicted before it's been happened. The timestamp, the metadata of the videos you could actually see in my YouTube channel, and those are about that. Like, it's not exactly, we cannot predict the future. We can understand mathematics about the future, and we can actually see future, foresee future. That's what
mm.
I
so,
so
so
anyway, like, yeah,
yeah.
yeah.
So in trading, my approach to that, or the way I think about it, is all we can do is react
Mm-hmm.
or respond to what is happening now.
Mm-hmm.
We
Mm-hmm.
can't say with certainty about what is going to happen in the future, but by looking at the
No, but
past.
there is a futuristic option is there, future trade is there, right?
Yes, except I mean, if you're talking about like futures or options,
Mm-hmm.
the yeah, we can buy and sell those products, but the movement of the instrument in the future,
Mm-hmm.
what it does tomorrow, what it does the next day, we don't know, right?
Mm-hmm.
It's
Mm-hmm.
uncertain.
Mm-hmm.
So we have to accept that there's uncertainty there, but we can look at the historical price movements of the market,
Mm-hmm.
and we can infer probabilities. If certain patterns happen, then
Mm-hmm.
there's a probability that we'll get a big trend, or there's a
Mm-hmm.
probability that we'll get a down move.
Mm-hmm.
If you, for example, if you have a stock and it's been trending up strongly and it has 3 big down days,
Mm-hmm.
the probability of a rebound day is very high, because
Mm-hmm.
3 big down days is usually because of some news announcement that makes people fearful. They sell, and then eventually people realize, oh, the emotion was too high. It wasn't as bad as we thought, so the price recovers.
Mm-hmm. Mm-hmm.
Based on historical data, we can see that that is a recurring pattern. It doesn't always work, but the
Mm-hmm. Mm-hmm.
probability can be in our favor. So we can build a strategy around that. So then today, if we see the market was going up, but then there's 3 big down days, for example,
Mm-hmm.
we could make the decision to buy because the probability tomorrow is that it will bounce. Now, I'm not saying
Mm-hmm.
people should use that as a strategy. You have to test it for yourself on the different markets and so on, but it works well on some markets.
Mm-hmm. Mm-hmm.
So where trading successfully is about managing probability and managing risk.
Mm-hmm.
There's a
Mm-hmm.
probability that a certain move will happen. So we put a position on with a certain amount of risk. If we're wrong, we don't want to lose too much money, but if we're right, we might make some money.
Mm-hmm.
And then we
Mm-hmm.
do
Mm-hmm.
that, and over many many trades, and we can build wealth.
So the thing is that the daily trades, the patterns which are occurring in the daily trades, that could be appear that can appear in the future options as well. Am I right? Or
Yes.
what do you think about that? Like,
Well, I only trade stocks, so
Mm-hmm.
just the underlying stock. I don't trade futures. I don't trade options. I just
Mm-hmm.
trade the movement of the stocks. Um, so yeah, I mean, I don't. I guess I don't really have a view
Mm-hmm.
on the other instruments. All I know is certain patterns and strategies can give you a positive edge in
Mm-hmm.
any market. You just need to find the patterns and strategies that give you a positive edge, test them to build confidence, and then apply them over and over again with low risk, so that you can have a positive expectancy over time.
So how long you been trading the stocks?
I've been trading well over 20 years. I started probably a bit over 25 years ago now, and it took me about 3 years to figure it out and to get profitable and get consistent. And then since then, basically after about 3 years, I discovered systematic trading. I implemented trading systems, and then from then on, basically was able to make money, be profitable. Not every month, but fairly consistently over time. And so now I trade a range of markets. I trade the Australian stocks, US stocks, Canadian stocks, Hong Kong stocks. I trade long and short in most of those markets, and I trade crypto. I trade crypto mostly on the long side, but a little bit short as well.
See, if peoples who want to do overseas investments, like for example, as an Indian, if I want to buy the US stocks, my how do I do my paperwork? I need to get an account in the stock trading. I mean, in India, it is uh, the Sensex and things like that. That is where the trading is happening. In US it will be something different, and in China it will be something different, and in Japan it will be something different. So this paper works, how somebody can do that?
Yeah. So it depends. It differs market by market. In order to trade a foreign market, you need a
Mm-hmm.
stockbroker that has
Mm-hmm.
access to that market.
Mm-hmm.
Now, in some countries, you can only trade your own stocks. They don't allow you to invest overseas, or at least it's not
Mm-hmm.
easy. In other countries, you
Mm-hmm.
can trade wherever you want. I'm an Australian. I live
Mm-hmm.
in Australia. I have an account that allows me to trade in most of the major markets globally. So
Mm-hmm.
Interactive Brokers, which is the stockbroker I use, allows me to
Mm-hmm.
trade Australia, US, Hong Kong, Canada,
Mm-hmm.
as well as many other markets. Although, as
Mm-hmm.
an Australian, I can't easily trade the Indian market.
Mm-hmm.
I can't easily
Mm-hmm.
buy Indian stocks,
Mm-hmm.
which is a big disadvantage because it's actually a really great market to trade systematically.
Mm-hmm.
Um,
Mm-hmm.
so depending on where your listeners are, what you
Mm-hmm.
need to do is find a broker who will allow you
Mm-hmm.
to trade offshore stocks, and
Mm-hmm.
then you open the account, and they'll give you access to those markets. So
Mm-hmm.
it's not there's not one answer because every country has different rules about this.
Mm-hmm.
If you can't trade other markets, like
Mm-hmm.
there are quite a few countries that have strict capital controls where you can't easily invest offshore. That's that's not that doesn't mean you can't trade. It just means you have
Mm-hmm.
to trade your market. You have to
Mm-hmm.
learn how to trade just that market and make
Mm-hmm.
money with that.
So when we are talking about the overseas market, like for example, we are talking about the Hong Kong, we are talking about the US, and maybe about the Australian exchange, or maybe about the Indian exchange,
Mhm.
does this pattern which you are following will be repeatable or not?
Some of them are.
Mm-hmm.
So some patterns or strategies work well across many markets. Some of
Mm-hmm.
them are a little bit market specific.
Mm-hmm.
So,
Mm-hmm.
for example, trend following as a model where you buy stocks that are strong and going up, and you
Mm-hmm.
hold them while they keep going up. But if they turn around and start going down, you sell them.
Mm-hmm.
Long-term trend following works well in most markets.
Mm-hmm. Mm-hmm.
Um, so, uh, and I think in stocks that's true
Mm-hmm.
because economies grow, companies get better, companies develop
Mm-hmm.
new products, they grow, right? And
Mm-hmm.
if you buy if you get a signal to buy a stock which is trending up because lots of things are
Mm-hmm.
happening that are good, then that
Mm-hmm.
can continue over time. Momentum persists, and I
Mm-hmm.
think momentum is a principle that holds true across most markets.
Mm-hmm. Mm-hmm.
There are strategies that don't work across all markets. So, for example, I have a strategy that works very well for the Hong Kong stock
mhm,
market.
mhm,
It makes really good money in Hong Kong, but if I apply it to Australian stocks, it doesn't work that well.
mhm,
It
mhm,
doesn't lose money, but it's not good enough to trade with.
mhm,
That's
mhm,
because the Hong Kong stock market has a different personality, some different behaviors than the Australian market.
mhm, mhm,
It's actually a good thing because that means when you trade both markets, you get some diversification benefit.
mhm,
And
mhm,
diversification across different types of markets, different types of strategies is really
mhm,
powerful. Uh,
mhm,
it's it, it's what helps you smooth your returns in the long run.
mhm, mhm, mhm. So, as a beginner, if somebody want to trade somewhere, which market would you suggest for them?
When you're starting out, the market
Mhm,
you choose, it has to fit your lifestyle. So
mhm,
if you're trading manually, you're placing your trades,
mhm,
you have to trade a market that you can actually you have time in your life to
mhm,
place the orders. If you have a full-time job and
mhm,
you can't be at the computer during the day to place your orders,
mhm,
you can't trade that market,
mhm,
um, or it's more difficult. If you you don't want to have to stay up late at night to trade in some offshore market because
mhm,
then you'll just burn out, you'll be exhausted. So you've got
mhm,
to make sure that the market fits your lifestyle. You've
mhm,
also got to make sure that you have access to the market. I mean,
mhm,
if you're in India and you can only trade Indian stocks, that's the market you're going to trade, right?
mhm,
So it's got to fit your kind of geography.
mhm,
It's got to fit your financial constraints. Um, but the most important thing is you need a strategy that's profitable.
mhm, mhm,
So
mhm,
you for whatever market you're going to trade, you need to find, develop, or build
mhm,
a, a strategy that works. It gives you an
mhm,
edge.
mhm,
Um, and without a strategy that has an edge that you've tested to see that over time it works and it's profitable, then
mhm,
you shouldn't be trading at all. So the
mhm,
number
mhm,
one thing is to make sure that you have a strategy that has a positive expectancy. You've back tested it to know that it worked in the past,
mhm,
and it makes money, somewhat consistently over time,
mhm.
and that you're willing to follow it.
So, I mean, it is more about the user. I mean, how fit the market is for me. But when we look into the markets, I mean, some markets are more profitable. For example, US market. So the exchange value of the American dollar is far better than that of the Australian dollar, and also Indian rupees also. So the profit I can make in the US stock might maybe if some stock is growing 10x in Indian market in the time of 1 year, and if some other stock is growing 10x in the in the US market, for me as an Indian, if I'm investing in the US stock, it is 840x for me. Like I mean the exchange rate of the USD. If it
Mhm.
is just 10x in India, it can be 840x in US market. In that, but sometime the stock, the way I could lose money is also 840x in US, right?
Mm.
Like and so I will lose more money that of I can lose in India.
Yeah. The way, the
If
way
I
to, the way to think.
I just wanted to ask you, like if we look into these sort of consideration, like Hong Kong exchange or any Indian exchange or American exchange, which exchange is more profitable?
Mm. The way to think about it is we make money as a trader. We make money because we buy an asset and the price of that asset goes up and then we sell it.
Mm-hmm,
Or we short sell an asset and the price of it goes down and we buy it back. So
mm-hmm,
we make money by the price of an asset moving as a directional systematic trader. Now, if you buy a stock in India,
mm-hmm,
the currency is valued less than the US dollar.
mm-hmm,
but the asset that you buy could still go up, let's say 50%, 100%. If you buy a
Mhm.
stock in the US, it could go up 50%, 100%.
Mhm.
But when we're trading, we want to adjust our position size, how much we buy of each stock, so
Mhm.
that our risk is controlled. The number one driver of success long term is to
Mhm.
make sure you don't lose too much money when you're wrong. You need to
Mhm.
have a small risk, 1% of your account or less, so that
Mhm.
if you're wrong, you don't get hurt too much. Now,
Mhm.
if you're sitting in India and you buy an Indian stock,
Mhm.
1% of your account, you can buy a certain amount of stock. If you have to
Mhm.
buy it in US dollars, it's a US dollar stock, you can buy less and
Mhm.
have 1% of your account at risk. So no
Mhm.
matter what exchange you're trading on, no matter what price the stock is at, if it's a $1 stock, a $10 stock, a $100 stock, $1,000 stock, it doesn't
Mhm.
matter, because we
Mhm.
need to be buying more or less of it to make our risk on each trade consistent.
Mhm. Mhm.
So when we think about it like this, no one exchange or stock is going to be more profitable or less profitable for us, because
Mhm.
first we think about risk and we
Mhm.
size our trade bigger or smaller to keep our risk
Mhm.
consistent.
Mhm.
And that way, if we're wrong, we don't blow up our account.
Mhm. Mhm.
And because we've sized our risk consistently, our returns are also
Mhm.
consistent from one market to the other.
Mhm. Mhm.
So just because the US dollar is strong, just because the stock price is high, doesn't make
Mhm.
it more profitable for us to trade.
Mhm. Mhm. Mhm.
It actually doesn't matter where you trade or what
Mhm.
the currency exchange is.
Mhm.
Um, what matters is how much does the asset that you buy or sell move, and
Mhm.
how big is your position size? How much risk do you place per trade?
Mhm. 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 So it's really doesn't matter whether I am trading in overseas or whether I'm trading in India. If my miss and hits are aligned properly, right?
Correct. Yeah,
Mhm.
absolutely.
Mhm.
Now, the
Mhm.
advantage of trading overseas as well as your home market is
Mhm.
diversification. It's not
Mhm.
because another market is necessarily more profitable.
Mhm.
Now, if you've got a really great profitable strategy for the Indian market,
Mhm.
trade it,
Mhm.
manage your
Mhm.
risk, grow your wealth. If
Mhm.
you've
Mhm.
also got a great
Mhm.
profitable strategy for the US market or the Australian
Mhm.
market, trade it
Mhm.
as well.
Mhm.
Have
Mhm.
some money for the local market, some money for the international market,
Mhm.
allocate a percentage of your capital to each, and manage
Mhm.
your risk uh, accordingly. And
Mhm.
the different markets will smooth each other out over time. That's a real
Mhm.
benefit. But
Mhm.
if you can only trade your home market, I think
Mhm.
that's fine, as long as you manage your risk and you've got a strategy that works.
Mhm. 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 Um, So when we are talking about the stock, the other option is crypto, which you also does the crypto trading.
Mhm.
So what differentiate the stock from the crypto? Because I designed a cryptocurrency called E-Ladder that is living in the Cardano blockchain, and the utility of this particular token is to store the data in non-resistive manner, and I mean some sort of the data has to be non-additive. So on this process, I have built a token, and it's been listed in 2 to 3 exchanges. So when we compare to the stock trading and the crypto exchanges, the difference over here is that the crypto, apart from the stock, it's 24 into 7, and it is cross border. I mean, it's not like there is nobody is. I mean, if you want to buy Bitcoin from wherever you are, you can buy from one exchange or another exchange, or some other friend can buy and send to your wallet. Or if you want to buy some other cryptocurrency, you can buy and you can sell it cross border. Basically, like
Mm.
it's killing all kind of constitutional constitutional blockages over the financial transactions between the countries. So in this particular manner, how do you see this the trading options which can be applied applicable in the stock also can be applicable in the crypto trading as well. um how do you see, because crypto is 24 into 7?
Mhm. Yeah, it is a little bit different. There's a few fundamental difference or important differences between stocks and crypto from a trader's perspective.
Mm-hmm.
The first one is the obvious one. It's 24/7. It's always trading. So in stocks, we have the stock market where all of the trading happens. It's in one place on
Mm-hmm.
one set of computers. So all of the trading happens there. In crypto, the trading is happening everywhere, like you said.
Mm-hmm.
In stocks, the stock market opens in the morning and it closes in the evening. And
Mm-hmm.
overnight, it's not open. Well, there's some overnight trading on some exchanges, but generally there's an open and there's a close. In
Mm-hmm.
crypto, happens all the time, 24/7.
Mm-hmm.
So in crypto, there's a notional open and close. It's the time of day where everyone agrees this is the day's open and this is the day's close, but then immediately the next day starts. So as soon as the close happens, the open happens. So you can
Mm-hmm.
still see a daily chart. You can also see
Mm-hmm.
a 1 hour chart, a 30-minute chart, a
Mm-hmm.
1 week chart. It doesn't matter.
Mm-hmm.
You can still see those charts.
Mm-hmm.
If you can see the charts of the asset, you can
Mm-hmm.
develop systems and strategies that work for that asset.
Mm-hmm.
The difference with crypto is if you get the signal at the close of the day, you immediately have to place the buy because it's
Mm-hmm.
already trading. Yeah. In
Mm-hmm.
stocks, at the close of the day, you get the signal. The next morning, you place
Mm-hmm.
the trade. You have time.
Mm-hmm.
In crypto,
Mm-hmm.
it's immediate.
Mm-hmm. Mm-hmm.
So then we have to look at how do the markets move? Do the same
Mm-hmm.
strategies in stocks also work in crypto, or
Mm-hmm.
do we have to be different?
Mm-hmm.
Um, and the crypto market is much more volatile than
Mm-hmm.
stocks typically.
Mm-hmm.
The bull markets are much faster. The bull
Mm-hmm.
bear cycles are more condensed compared to
Mm-hmm.
stocks.
Mm-hmm.
So the rules that work in stocks, they might they can make money in crypto, but generally you
Mm-hmm.
have to adjust them and fine tune them specifically for the crypto market because the
Mm-hmm.
behavior of the market is a little bit different.
Mm-hmm. Mm-hmm.
Having said that, trend following works in stocks.
Mm-hmm.
Trend following also works in crypto.
Mm-hmm.
Mean reversion works in stocks. Mean
Mm-hmm.
reversion also works in crypto.
Mm-hmm. Mm-hmm.
So the generic strategies can be the same,
Mm-hmm.
but the specific rules that you apply, the parameter
Mm-hmm.
values you use, do you use a 200-day moving average or a 50-day moving average or a 10-day moving
Mm-hmm.
average? That might be
Mm-hmm.
different between the two markets.
Mm-hmm.
And that's something that you have to test. This is why I
Mm-hmm.
like systematic trading because we
Mm-hmm.
can get the data, we can put our rules over the data and test it historically and see how would that
Mm-hmm.
have performed.
Mm-hmm.
So
Mm-hmm.
what we find is that the rules that work in crypto are a little bit different to the rules that work in stock,
Mm-hmm.
but similar strategies, right? We're still
Mm-hmm.
trend following or we're still doing mean reversion.
Mm-hmm.
Does that make
Yeah,
sense?
when we are talking about crypto, there are terms that is not associated with the stocks is been appearing there, like for example, liquidity pool, yield farms, how far you can get yield from some token in a particular time, and these kind of things. Instead of trading, sometime maybe providing liquidity could be more better, or sometime it can be you can lose all your money, like the Sand Bankman Fried is been done for with the FTX token. He run away with, I mean, he is a kind of build a glitch that I mean, he had some thousands of tokens and he sold one of the token for 1 billion, so his total asset become he is for, so I mean, he showcased his asset is like a 1,000 billion to the investors and got the money and build the things around that. And in reality that money is not existing there.
Mm.
So the how do you identify this kind of activity, like means, I mean, FTX is a kind of thing which has been actually backed the US election as well, like this is the way it is been went on. How do we identify, is there any way you found it is identifiable, or is there a way you look into this kind of stuff?
The way I think about it is the crypto market is still new, relatively
Mhm,
new. I mean, it's been around for a
mhm,
few years now, a fair few years now, but compared to stocks, it's still very new. And so it's a little bit like the Wild West. You
mhm,
see the
mhm,
old Western films, cowboys.
mhm, mhm,
It's
mhm,
like crazy times, right?
mhm, mhm,
And
mhm,
so crazy things can happen, like
mhm, mhm,
thefts, like scams, fraud, like
mhm,
rug pulls, like
mhm,
crazy things can happen. Whereas in stocks, the markets are more regulated, they're more mature, less crazy stuff happens. Still happens,
mhm,
but less.
mhm, mhm,
You still
mhm,
have stockbrokers go bankrupt every now and then.
mhm,
Doesn't happen that often, but it can happen.
mhm,
In
mhm,
crypto, you just want to acknowledge that it is still a immature market. So there's
mhm,
still
mhm,
the risks that
mhm,
come with being an immature market. And
mhm,
so you've
mhm,
got to think about counterparty risk. You've got to
mhm,
think about catastrophic risk. You've got to think
mhm,
about regulatory risk a little bit
mhm,
more.
mhm,
So,
mhm,
for example, take regulatory risk. The
mhm,
regulations around crypto are still evolving.
mhm,
Would I put
mhm,
all
mhm,
of my money into crypto? No, absolutely
mhm.
not. That would be stupid.
Yeah, for
Because
example, US market is actually whitelisting some of the cryptocurrencies, for example, Bitcoin and things like that. Like, Federal Reserve is trying to move into,
yeah, so
yeah,
that's
yeah.
positive regulatory moves, but also
Mhm,
in a new market there can be negative regulatory moves as well. And so,
mhm, mhm,
we need to basically allocate our capital to acknowledge that there is more risk in one market than there is in another.
mhm,
There's
mhm,
also more risk in one token than
mhm,
maybe in one stock.
mhm,
Okay,
mhm,
maybe not Bitcoin, but small cap, like
mhm,
small cap tokens. Yeah, absolutely, because
mhm,
most of them are worthless. Most of
mhm,
them have
mhm,
no value, no utility, or even if they claim there's got some utility, they got no customer base. It's just a hope and
mhm,
a dream that maybe one day it will make something. So
mhm,
the
mhm,
price is very volatile because the value is uncertain.
mhm. Yeah, because the peoples who are holding maybe very less number, like compared to, so the market volatility is much more in the crypto token, which is new to the market is.
Yeah, absolutely. So what
Mhm,
we've got to do is make sure that as a percentage of our total investing capital, what we put
mhm,
into any one token is not
mhm,
very much. Because
mhm,
if that token goes to zero,
mhm,
we don't want to lose a big chunk of our account.
mhm,
So
mhm,
my position sizing in crypto as a percentage of
mhm,
my entire trading accounts is very,
mhm,
very small, much
mhm, mhm,
smaller than in stocks, because I
mhm,
know that there's more uh, ticker specific catastrophic risk in crypto.
mhm, 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 mhm,
So I always think about the risk first
mhm,
because risk is about survival. It doesn't
mhm,
matter how much I make this year. If I blow up next year, I've got
mhm,
no money. But if I
mhm,
survive first, I never blow up, then I can
mhm,
constantly grow my wealth.
mhm, mhm. So how do you help a person who want to enter into the market? For example, somebody, let's say X person is came to you with 100 USD, and what percentage of how do you help him? Like, will you tell him to put 90 percentage of the money into the stock market and 10 percentage into the crypto, and in this 90 percentage 80 percentage will go to X stock, and 5 percentage will go to Y stock, and 2 percentage will go to Z stock, and same will go to the cryptocurrency as well? How do you help a person who is approaching you to with some money to invest into the stock market as well as the crypto? How do you help him?
Yeah, my approach is to teach the trader or the
Mhm,
investor how to make those decisions for yourself.
mhm,
And the
mhm,
way these are capital allocation decisions, right? And the
mhm,
way we allocate capital is we have strategies in each different market. And
mhm,
those
mhm,
strategies make a certain amount of return, have a certain amount of volatility, have a certain amount of drawdown potential.
mhm,
And
mhm,
if we look across stocks and crypto, and
Mhm.
we look at all of the strategies we've got in each market, we can create a capital allocation that meets our objectives. My
Mhm.
objective is probably different to your objective because we're different people,
Mhm.
we're different ages, we have different family situations, we have different job
Mhm.
situations. So the
Mhm.
first thing to do is understand your objectives. How
Mhm.
much money do you have? What is your
Mhm.
drawdown tolerance? How much
Mhm.
activity do you want in your account? What's your
Mhm.
return objectives? Once you
Mhm.
understand them, then you start to build a portfolio of strategies
Mhm.
and allocate capital between them to best meet your objectives.
Mhm.
So
Mhm.
to break that down, you need several different or many different systems. And then you
Mhm.
combine those systems into a capital allocation model and adjust the weightings to meet your objectives. If
Mhm.
we did the same exercise, we would end up with a different percentage for stocks and crypto and for each
Mhm.
strategy in stocks and for each strategy in crypto because we have different objectives.
Mhm. Mhm.
So my
Mhm.
job is
Mhm.
not to tell someone 10% here, 90% here, and within that 90%, 2020, that's not my job.
Mhm. Mhm.
My job is
Mhm.
to educate someone so that they know how to make the decision for themselves to best meet their objectives.
Mhm. 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 So in that scenario, how many peoples you have helped so far?
I have several different programs in my stock mentoring program. I've
Mhm.
taken about 500 people through that program over several
Mhm.
years. I have
Mhm.
around 80 people live in that mentoring program right now.
Mhm.
On the crypto side, several hundred have been through the program. The
Mhm.
crypto course is newer, and I've had
Mhm.
other courses in the past that have had many hundreds of people come through those courses as well.
Mhm.
What I teach, or the courses I teach, have evolved over time.
Mhm.
But look, over the last several years, I would say several thousand traders have seen my stuff, worked on my strategies, learned from that, and use that to improve their trading.
Mhm. 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 So when we are talking about the tools that helps for the trading in the crypto or the stock, do
Mhm.
you use any sort of softwares? Because when I'm talking about the softwares, what I understood as I have created my cryptocurrency almost 3 years ago, and
Mhm.
I started listing in the different exchanges. I mean the liquidity pools. I'm started to provide some little bit of liquidity, and some these holders is been grown into a small size of community and stuffs like that. So the idea is like, so when I'm doing this thing, I understood there are a lot of hackers peoples are actually targeting the peoples who are holding the crypto. For example, there are some scripts which is running in the background of your java, I mean your browser, that will actually constantly spy on you and take the data and what you are doing in your computer, and it will send back. I mean, if you have a considerable amount of the crypto holding in your wallet and somebody could have found out in some way, so I have made some 9-10 extensions in that way, like, to make the people feel secure about their hard-earned money holding, like whether it is earned smartly or hardly, or that doesn't matter. Money is money, right? Like, I mean if you have money, it's you feel better. If I have money, I feel better. I mean there is nothing wrong in that, like, anyway. So I have found out these sort of softwares that can actually protect people from actually getting attacked against them. So is there any sort of softwares that you use in order to or do you have you ever thought of building something that helps you and your people in a way of trading the things?
Yeah, there's a couple of bits of software. Not so there's the security side, which I think is important for everyone.
Mm-hmm.
Whether you're investing in trading or not, you need to make sure your computer is protected, that your privacy is secure, that you don't have
Yeah, so
spyware,
in my
malware.
case, I'm a developer. I'm not a, I'm not an investor or a trader in the crypto. I develop the infrastructure around that, like,
Right. Yeah.
Mm-hmm.
So on the trading side, the software that you need is that's needed is the backtesting software.
Mm-hmm.
So software like Amy Broker, like Real Test, like Wealth Lab, TradeStation, these sorts of softwares allow you to get the historical market data, to apply
Mhm.
your rules to that data and see how that strategy would have performed over time. You can backtest the rules and see if they're profitable, fine tune the strategies, optimize them, adjust them. So the
Mhm.
backtesting software is the most important thing for a systematic trader. Whether it's stocks or crypto, doesn't matter. You need that
Mhm. Mhm.
because we need to be able to generate our signals. We need to be able
Mhm.
to test our ideas and check that the systems we're using are profitable. The
Mhm.
backtesting software does that. You
Mhm.
need software to get the data.
Mhm.
So for stocks, there's commercial providers that
Mhm.
provide the historical data. Norgate
Mhm.
provides data for the US, for Australia, for Canada. Metastock data provides data for all of the exchanges globally, and there's many
Mhm.
other data providers as well. There's quite a few different data providers for Indian stocks inside the Indian market. You
Mhm.
need a data provider to give you the historical data, and that
Mhm.
historical data needs to feed into your backtesting software so you can test
Mhm.
your ideas, generate your signals. Beyond that, you need your stockbroking platform, which is where you're placing the trades. If you want to
Mhm.
automate, you need an automation engine or an API that links your backtesting software to your broker so that the trades
Mhm.
can be placed automatically. You don't
Mhm.
have to automate, you can trade manually. I have
Mhm.
an automation. It's a custom built automation that links Amy Broker to Interactive Brokers and
Mhm.
places trades and manages them for me. And my students
Mhm.
have access to that as well.
Mhm.
So they're the main trading softwares that you need, and then the obvious things like spreadsheets to record your trades and
Mhm.
track your performance and all of those things as well.
Mhm. Mhm. So, when people are approaching you to study about the stock trading, you also help them to, you also provide the access to these sort of applications which you are using, right?
These applications are not mine; they're
Mhm.
off-the-shelf commercial programs. So I will say, you need this software, go buy it. You need this data, go buy it.
Mhm.
That's separate to me.
Mhm.
I don't build software; I build systems and strategies that go into the
Mhm.
software.
Mhm.
So yeah, I don't sell the software, but it's
Mhm.
it's cheap, commercially available, very well supported, good track
Mhm.
record, software. It's not a lot of people will try and build their own backtesting
Mhm.
platform. It's a waste of
Mhm.
time because there's
Mhm. Mhm.
already commercial software that does it for you that's way better than what the individual person could come up with.
Mhm.
So I would just say you just choose backtesting software. As I say, I use Amy
Mhm.
Broker and Realtest. They're both great software. Wealth Lab is great software. Um,
Mhm.
so you get that, and then you just learn to use it.
Mhm. Mhm. See, when we are talking about the backtesting software, if you look into the newly developed technological advancement, we could actually see AI language models is being used and trained and used in a different aspect of the technological development around the fintech industry. Um, I mean, China is coming up with some better ideas, and they have already made some waves in the, the stock trading already. China had did something like that. So I feel this is also a very important thing, right?
Yeah, I think it's becoming more and more important.
Mm-hmm.
Um, at the moment, AI in trading is a useful tool, but
Mm-hmm.
it's not replacing the traditional tools. Not yet.
Mm-hmm. Mm-hmm.
I think it's still got a long way to go. Um, the way I use AI at the moment in trading
Mm-hmm.
is to help to come up with new ideas, to
Mm-hmm.
brainstorm, to make suggestions on how to improve certain aspects of performance,
Mm-hmm.
basically as a sounding board to test ideas with, and
Mm-hmm.
so on.
Mm-hmm.
It's very useful in that respect.
Yeah, exactly. AI won't give everything in a boilerplate. An expert is really required, to figure out what is right and what is wrong over there. Exactly. Yes.
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 Yeah, so I think it's still very, it's not AI. There's no free money, right?
Mhm,
There's
mhm,
no free
mhm,
lunch. You can't just, as a newbie with no trading experience, type into an AI and expect to get rich in the markets. It's not going to happen,
mhm,
and it will never
mhm,
happen
mhm,
because the markets are a competition and the
mhm,
best win, right?
mhm,
So
mhm,
we need to use it as a tool, but not put blind faith in it and expect that
mhm,
it's going to make us wealthy. We need to
mhm,
learn the fundamental principles of trading. We
mhm,
need to learn how to manage our risk. We need to learn how
mhm,
to allocate our capital. We need to learn how to develop a profitable strategy that is stable, consistent, robust, um,
mhm,
and works over time and works across different markets. We need to learn all of that, and then AI can help
mhm,
us to do some of
mhm,
that. It can help us to come
mhm,
up with new rules that maybe we haven't thought of, but we've still got to learn to be a trader.
mhm, 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 mhm. So, if any of the developers who is actually going to listen this particular podcast, what would be an ideal software product that you will imagine that you could had?
That doesn't exist yet, like a new software that is needed.
Mm-hmm. I mean, this particular functionality can make your life much more easier. Maybe it could be a little bit of automation, or it can be some sort of a spreadsheet manipulation stuff, or
Hmm.
it can fetch some data and put it in some data dump, or maybe some cron job that will send you out the frequent messages to your inboxes, or maybe some security thing that you could actually install around the trading station of you, like maybe it can be a home station or an office station or anything that sort, any one thing which you wish you would be having.
Yeah, it's interesting because most of the things that you said are there.
Mhm,
Most
mhm,
is
mhm,
available. Um, I haven't I haven't seen a really great trade, like a trade tracking and
oh,
management software that takes the data from all the different brokers and presents the performance and the results in a really neat, flexible way that
mhm,
allows reporting for tax in Australia or tax in the US or tax in India, like that
mhm,
allows you to easily manage all of the paperwork and all of that. There's some things
mhm,
here and there. There's some
mhm,
okay, good packages, but I think that's an area where there's still some opportunity.
mhm,
Um, I think there's some opportunity probably in customizing and interfacing with AI and
mhm,
allowing traders to interface with AI in a more useful way. A
some kind of
typical
yeah, some sort of API which will be feeding to the machine learning language which is existing in the backend, and you will
yeah,
be
yeah.
able to communicate with so let's imagine in this way, like you are having a system which is actually presenting the data from different markets, and you are actually, and along with that some sort of AI suggestion also coming up with that, like that could
Mm,
be a better product.
yeah.
What do you think
Actually,
about
there's
that?
another one that would be really interesting, and that is getting more time series data streams
Mhm,
available easily. So we have price data, we have volume data very easily across all the markets, but
mhm,
we have some economic data easily,
mhm.
but we don't have fundamental historical data cheap, easily available. I mean, you can get it, but it's expensive. It tends to be expensive.
Mhm,
Um, but what other time series data can we get that might be useful and valuable for
mhm.
testing system rules?
So
Sentiment
time
data,
how the
social
stock
media
is been
feeds.
performed the last year and before year, like that. You say.
Mm.
Mhm,
And I think that democratizing that or making that freely available, because most of those things are available, but it's
mhm,
expensive. Big hedge
mhm,
funds have models and software that produces sentiment data that monitors tweets for different
Mhm.
keywords and interprets news, real time, all of that. But a lot of that information is not available yet at a
Mhm.
sensible
Mhm.
price to the retail trader.
Mhm. Mhm.
I feel like there's some opportunity there to make information more broadly available.
Mhm.
I
Mhm.
don't know how profitable it will be because
Mhm.
we haven't been able to test it because we don't have it.
Mhm. Mhm. Mhm.
But
Mhm.
I would really like, imagine some integration between Google search trends, Google Trends,
Mhm.
Twitter feeds, and other social medias that tell us how many people are looking or talking about a different stock or a different product or something like that.
Mhm.
I
Mhm.
mean,
Mhm.
that sort of data could
In
be quite
social
useful.
mine,
Yeah,
something kind of a socially mining all the social media.
yeah. Now the challenge is you
Mhm.
don't know it's useful unless you can get a time series so you can test it.
Mhm. Mhm.
You
Mhm.
might get the current, oh, look, today lots of people are searching for XYZ,
Mhm. Mhm.
but you don't know whether you should take action on that unless you have
Mhm.
that same data over time, and then you
Mhm.
can test it as a signal for
Mhm.
your system. So if we could get
Mhm.
more different time series data, then maybe we can generate some more interesting and unique strategies
Mhm.
and improve our performance.
Mhm. 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 That would be a good idea to look into, basically. So, if somebody is listening to our podcast, and in what way they can connect with you, and why they have to connect with you?
Sure. The best way to connect with me would be through the website, enlightenedstocktrading.com.
Mm-hmm.
And if you go to enlightenedstocktrading.com/free, there's
Mm-hmm.
some free resources to learn more about systematic trading. You just put your name and email, and there's some free courses in there, some ebooks, and some cheat sheets to help you stabilize and improve your performance.
Mm-hmm.
And even a trading strategy example, which is all fully coded.
Mm-hmm.
So I think there's some good resources. And then once you are in my world, you'll be in email contact, and then we can talk further. I have
Mm-hmm.
courses and programs and everything, but the best thing to do is to start, with enlightenedstocktrading.com/free. Learn about it, see if you like the approach that I have, the systematic
Mm-hmm.
trading approach, and if you do, learn a bit about it, and then over time we'll talk.
Mm-hmm. 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 So you will be available in your website, email, and everything. That's what, right? Like, anything particular you use all the time, like any kind of social media, which where you will never miss an email inbox or never miss an email. Hi.
Yeah, look, I'm active on Facebook, Twitter.
Mm-hmm.
I mean, YouTube is not really interactive, but I'm always posting content on YouTube. But Facebook and
Mm-hmm.
Twitter are best. You can search Enlightened Stock Trading.
Mm-hmm.
Just be careful. Make sure you're using the original ones. There are some scammers around who try and
Mm-hmm.
cheat people by pretending to be me. That's why I say the website, because there's only one, enlightenedstocktrading.com. And so if you go
Mm-hmm.
there, then you can connect from there to all the social medias, and people will
Mm-hmm.
see.
Mm-hmm. So thank you for being the part of the show today, and it was a great, it was a very good deep discussion which we had about the economics altogether. Like, anyway. So anything else you want to tell to the people who are listening to?
I would just say that if you're interested in trading, take the time to learn. Don't
Mm-hmm.
assume it's going to be easy money. Just because you can easily buy and sell a stock or easily buy and sell a crypto doesn't mean
Mm-hmm.
it's easy to make money long term. You need to
Mm-hmm.
learn, like everything. Uh, it's not like a 4-year university degree, but you do need to put
Mm-hmm.
in some effort to learn. And the most important thing is to keep your risk low so that you
Mm-hmm.
can stay in the game and not blow up and lose all of your money. If you can
Mm-hmm.
survive long term, eventually, then you can learn to make money and build your wealth. But too
Mm-hmm.
many people try and get rich quick. Try and get rich slow so that you don't blow up and lose everything. That's my guidance.
Yeah, thank you for being the show.
Thanks so much for having me, Aaron. Appreciate your time.
Yeah.